In April 2020, during the first wave of COVID-19 pandemic, both India and China went into lockdowns. All businesses were shut and only essential services was offered by banks. In India, the loan disbursement in April 2020 almost went zero. No loans were dispersed as customers stayed indoors and only a few bank officials came to office. But in spite of the lockdown, a bank named XW Bank in China was approving 330,000 loan applications per day. But how was this possible? XW Bank is a completely new type of bank called neobank, and it is 100% online. That is, it has no physical branches. Customers applied for loans online, and some 217 loan officers of the bank working from home were processing the loan files. This is incredible. China has 5 such online banks. India now wants to catch up. On July 20, 2022, Niti Aayog, the highest thinking body of the Government of India, released a report on formulating the rules for a new type of bank called digital bank. This is the same as the XW Bank of China. These banks will be 100% online with no physical branches. But wait, there is already so many types of banks in India. Why do you need another new type of bank? What is the requirement and what problems will these new banks solve? Let's find out. India's traditional banks are extremely efficient in giving loans to salaried customers and for established companies with turnover of 5 crores and over. But for smaller companies with turnover of less than rupees 5 crores, access to credit is almost zero. The loan requirement of these companies range from rupees 1 lakh to rupees 10 lakh. These small ticket loans, as they are called, are considered unprofitable and risky and hence shunned by traditional banks. These small businesses can never even get a credit card. Forget about other loans like overdraft, term loans, etc. At present, this segment is serviced by local money lenders, chit funds, and other informal sources of credit. But the big question is, how important are these small businesses to the Indian economy? The Indian government estimates that there are over 6.3 crore MSME units in India, of which 80 lakh are registered. Of the registered MSMEs, 94% of them are micro units, that is, companies with turnover less than rupees 5 crores. The most important information about these MSMEs is that they contribute 30% to India's GDP and employ 11 crore people, that is 9% of India's population. This is low compared to developed countries like the US, where MSME contributes 55% to the GDP and provides employment to 65% of the population. In fact, the loan requirement for the MSME sector is rupees 37 trillion, but only rupees 10.9 trillion is addressed by banks and NBFCs. So why can't banks and NBFCs address this gap? There are 4 reasons. These small MSME companies have no credit history because they borrow money from money lenders and chit funds. Since the loan is small in size, the transaction cost is high and hence not profitable. Indian banks are very rigid and not very keen on innovative loan products. Most importantly, loans to this segment is very risky. Moreover, the documentation process required for applying for bank loans is so onerous and time-consuming that an MSME owner would rather prefer borrowing from a money lender than a bank. But if India is to develop into an economic powerhouse like the US, then this credit gap has to be closed. This is where digital banks come in. Digital banks, that is, banks that are 100% online and have no physical branches, have different names, like it is called challenger banks in UK, but in most part of the world, it is called as neobanks. There are over 230 neobanks around the world. China has 5 neobanks. Does India need neobanks? A neobank is basically a fintech company like Paytm or Google Pay. They leverage digital technology to a very high extent. Neobanks solve many of the problems customers face with traditional banks. For example, neobanks can simplify the cumbersome loan application process in India. A neobank specifically catering to MSME units in India can be created. This bank will focus only on this sector, especially the micro sector. Since neobanks are only online banks, setting them up is very easy compared to the brick and mortar traditional bank. neobanks will obviously need to bring in innovative products to meet the demands of their customers. For example, video KYC for onboarding all its loan customers. Neobanks can take more risk than traditional banks as they are presently funded by investors and venture capitalists. But at present, there is no regulation or framework for the creation of such a bank. This is what Niti Aayog wants to propose. At present, there are three types of neobanks that exist in the world. The first is front-end neobank. These neobanks are actually part of an existing traditional bank. They offer over-the-top services to the customer. But deposit, lending and balance sheet is actually part of the larger traditional bank to which it belongs. Examples of them are Open Technologies, Razorpay, Dave, etc. The second category is a full-stack neobank. These neobanks are completely separate entities with their own license to accept deposit and give loans. Examples Starling, WebBank, Monzo, XW Bank, etc. The third is autonomous unit of traditional banks. These entities are essentially net banking operations of traditional banks that function autonomously and compete with standalone neobanks. Example 811 of Kotak Mahindra Bank and YONO of State Bank of India. Niti Aayog favors the full-stack neobanks. These banks will be completely independent and will have all the freedom to innovate new products and cause disruption in the market. But regulations have to be put in place. In 2013, only 53% of Indians had bank accounts. After the RBI introduced payment banks and UPI, today almost 95% of Indians have at least one bank account. Cash transaction is almost becoming nil. RBI wanted to follow on this success on the credit side. CIBIL has found that out of 220 million credit-worthy customers, the Indian banks are servicing only 33%. The remaining 154 million customers remain untapped. India has only 66 million credit cards for a population of 1.4 billion, whereas the US has 365 million credit cards with a population of only 331 million. RBI wants to tap this credit market by introducing neobanks. But why? Cannot the traditional banks do the job? The problem with traditional Indian banks is that they have more than 40 odd products to sell, and there is no focus on any particular segment or product. There is lethargy when it comes to adoption of new technology, and also traditional Indian banks do not want to take much risk. They are too focused on profit. RBI wants to bring a revolution in the flow of credit in India. Loans must be easily accessible, especially for small businesses and MSME units. But what will the neobanks do to bring the next revolution in the banking sector? What has been the experience of neobanks in other parts of the world? Did it solve any problems? As it has already been pointed out, how XW Bank in China approved 330,000 loans per day for small businesses during the peak of the pandemic lockdowns, while Indian banks came to a standstill. Neobanks provided invaluable support to small businesses during the pandemic, as they were easily accessible. Speed and accessibility of the neobanks was clearly demonstrated. Next is innovation. Neobanks have shown incredible capacity to innovate. WeBank, another Chinese digital bank for example, launched new products in 10 days during the crisis, setting a record speed for its product launch. But what about the risk involved? The IMF has found that neobanks had leveraged data analytics and machine learning to manage risk. Neobanks have been able to accurately predict the cash flow needs and default rates of different customer groups in location, sector, activity, and business relationship, thus allowing them to manage risks better. Neobanks gather information of customers' businesses using various electronic data trials and was also able to monitor their business activities. This has helped in a more accurate understanding of their customers' business. Neobanks are a perfect solution for small businesses. For example, 80% borrowers of MyBank, another neobank in China, are small firms with less than 10 employees. Most of the loans issued are of small amounts, short duration, and used primarily for operational purposes. By 2020, MyBank had 35 million MSME customers. The average loan ticket size is Rs 3.5 lakhs. This might look very risky, but MyBank's NPA and operating cost is lower than that of other traditional banks in China. About 30% of MyBank's customers are restaurants, 20% are local convenience stores, 10% are fresh food sellers, and most others are local retailers and service providers. These small businesses have no access to credit from traditional banks because the average loan requirement of these firms is only rupees 3 lakh, whereas a commercial bank in China has a minimum loan size of rupees 1.2 crores. This is the exact situation in India also, where an optimum business loan amount disbursed is around rupees 20 lakh. A 3-step process is proposed in creating a full-stack neobank. Step 1. A neobank would start with a restricted digital business bank license and a restricted digital consumer bank license. This would be the testing phase. Step 2. After satisfactory performance, the neobank would move to a sandbox framework. Here the relaxation would be given upon which a neobank can scale up its business and also fix any problems encountered earlier. On satisfactory performance, at Step 2, the neobank would be given a full-stack digital business bank license. In this stage, the neobank would become completely independent and would be allowed to operate with full freedom. The minimum capital for Stage 1 and Stage 2 is contemplated to be rupees 20 crore. And on progression to Stage 3, that is a full-stack neobank, would need a minimum capital of rupees 200 crore. Neobanks would be given full access to all key banking infrastructure enablers as available to traditional banks like Aadhaar and credit information systems, UPI and central payment systems, ATM schemes, deposit insurance and credit guarantee corporation, AA ecosystems, etc. A neobank will also have to comply with all regulatory touchpoints like capital adequacy, risk weights, liquidity coverage ratio, etc. Looks like the neobank is the next big revolution India is going to witness after UPI, and it already shows great prospects. It remains to be seen how and when RBI will roll out the neobanks in India. So friends, I have attached all supporting reading materials for further study and reference in the description below. If you like this video, please subscribe and comment. Thanks for watching.